Hi everyone, today I'm talking about free stocks I might buy next. And the reason why I'm making this video is because I made a free stocks I'm buying in October video. And in that free stocks I'm buying in October video, I talked about maybe buying a bit more Ultra stock, Visa stock, and also Aurora stock. And I have actually gone and bought all three of them stocks. So kind of like there won't be much update about the stocks I'm looking at for like another month. And I felt like that a lot of people do take interest in like the stock market moves that I make and what stocks I'm buying and talk about them stocks. So I thought it'd be good to update you guys now that I've actually gone and bought them free stocks from free stocks I'm buying, which I actually think is like the first time for like a good year since I actually bought all the free stocks I mentioned in that month. But yeah, because I've gone and bought all three of them stocks, I thought I'd update you now with the stocks that I am considering looking and buying at, and I'm going to talk about them free stocks that I'm looking at. Now, the only thing that I'm going to say as well, guys, is that there is earnings season coming up around the corner, and also with the potential that there could be a dip at any point. I do like to keep a cash pile quite high, and as you can imagine, after buying free stocks, the cash pile has gone down a little bit, so I do want to build that up. But at the same time, if there's some opportunities out there where I feel I can make money, obviously I'm going to go make some money, guys. So I'll also talk about that as well later on in the video. So I have picked three stocks that I'm probably watching the most, but these are no three stocks that deserve honourable mentions, because I have been looking at them a little bit, but not as tempting as the three I'm going to mention right now. So the three honourable mentions are these. So one of them is Carnival Cruise, which is a company that I already have. I already have quite a decent position on it, and that's why I've not bought it, but that's on a big massive dip after earnings. But it's got nearly a 5% dividend yield now, which is crazy. Arista Networks is a growth company which is been down at the $220 mark for quite a while. To be honest with you, I only see about a 30% upside in this stock, but it looks like a nice growth company, and for some reason I just don't want to buy it at the moment. The third company is Altria stock, which is a company I bought quite heavy over the last month, and I would like to make this this position a little bit bigger in my portfolio, but because I bought quite a lot recently, I don't want to go and buy it all in one period in case the stock does dive a little bit more and I can buy it cheaper. So it is a company, Ultra is a company I want to buy more shares of, just not too close in the same period in case the stock does go down from here. So number one today, guys, is Uber, and Uber is a stock that recently IPO'd, and one of the big things that has put me off buying into Uber, and there's been two big things that put me off buying Uber, and that is that it's currently not making profit at the moment and it's losing quite a bit of money. It does have a fair decent balance sheet to cover that though, and I have previously gone for companies that haven't made money and invested in them, and because it has a good balance sheet and it is forecast to hopefully start making profitability in the next 2 years, I kind of like consider that not too bad of a point. And the other point is that it's quite a recent IPO, and normally I don't buy IPOs until 280 days after the IPO, which would take us to some point early next year. But looking at Uber, I'm kind of considering breaking that rule. Now, the reason why I feel like breaking that rule is because of this, is that I feel like the stock is really massively cheap at these kind of prices. And recently, quite a few analysts have come out and they've kind of upped their price on Uber from here, saying now is a good opportunity to get in after the IPO. Someone earlier this week, that I can't remember who, which I'll probably still put on the video anyway, they upgraded their price to $45 a share, so they're seeing upside from here. And to be honest with you, that's where I do see Uber valued, is somewhere around that $45 mark. I think that's probably a fair value for this stock, and the reason why is because we've not really had a company like Uber come on the stock market for a long time. A kind of company that makes you like kind of really interested in it, and you see quite a bit of potential in Uber. Now, some people will argue against the potential in Uber, and I like to compare Uber to the last company I feel like Uber that was IPO'd was Facebook, because Facebook, there was nothing really, if we go back to when Facebook IPO'd, there was nothing seen like Facebook out there, and everyone kind of like, can this like website actually make so much money from these targeting adverts? Is there actually that much potential with this company? And there was quite a few doubters out there that would be able to monetize it as well as they have done. Now, fast forward to 2019 and we look at Facebook, fantastic company that have been able to monetize what they've done right there. Uber is very similar. It's bleeding a lot of cash, but it's put a lot of infrastructure in. Now, Uber for me is a massive disruptor in the sector, and I like investing into growth companies that are disruptor and completely change that industry. Uber has completely changed the taxiing industry altogether. A lot more taxiing companies now are trying to copy the way that Uber are doing it with having their app and getting their app on their app store. And we've all seen Lyft come into this area as well. Uber for me is a fantastic company that is growing not just in the US, completely a worldwide company that is growing. And when we look at Uber and the money they're putting in the infrastructure, we're going to see a lot more, we're going to see Uber popping up in a lot more areas. It was kind of like about, I think a year ago, I went to somewhere in the UK on holiday, and I kind of just went on Uber just to see where I was staying, if I could get an Uber to like the city. Well, it wasn't a city, it was kind of like a town. If I could get a taxi to the town centre, and Uber wasn't there. I come back a year later and now they've got Uber, and they've been talking about how well it's doing since it's come up there when I was talking to the driver for Uber. And when we look at Uber, there's still a lot of areas, a lot of countries even, that Uber isn't in, and they have the ability to disrupt the network. And going forward, there's a lot of potential with driverless cars and what Uber could do there. I mean, that's a little bit far in the future right now, but there's potential right there for that. There's Uber Eats, which seems to be doing okay. For me, it's obviously not the main part of the business. I like the taxiing service, to be fair. And I think that's a completely game changer in that industry. So Uber for me has so much potential going forward, and like I say, it's not too far off profitability. 2 years is what they're saying. To be honest with you, I don't think they'll do it in 2 years. I think it'll be more 3 years, to be honest with you. But it's, it has the potential to carry on with this infrastructure investing it's doing right now, and eventually I think Uber will pay off for it. So it's kind of one of those where it's a really cheap stock, and it's kind of gets to the point where the risk versus the reward is kind of like the reward starting to outweigh the risk for me. So it's probably the biggest one on this list that I'm considering opening a little bit of a position in it, to be honest with you. Number two, a company that we were just talking about a second ago, which was Facebook. Facebook for me is a fantastic company. It is, in my opinion, one of the best stocks that you could invest in right now. It's still at a discount after it had a big massive drop. Obviously it had the Cambridge Analytica drop that it had. We had the end of the year drop as well, and it hasn't recovered to its 52-week highs yet. And it's really strange why it hasn't, because this company has a fantastic balance sheet. The growth is fantastic. It hardly has any debts at all. You have a great company in Facebook that also owns other companies as well, namely Instagram, which is a great platform that's growing absolutely huge. So what you get for this is fantastic. And for Facebook, their EPS will carry on growing because the money that will be made on them adverts that it does, its advertising, will be fantastic. So it's a solid company for the next 2 years, and it's not my biggest position in my portfolio. But if I was ever to look at my stock portfolio and I see Microsoft and Visa are my two biggest positions, if I had to choose another company that would, if I was forced to pick another number one company in my portfolio, and it could be Visa or Microsoft, I'd probably pick Facebook because of the potential it has over the next 2 years to grow with its EPS and revenue. It's fantastic balance sheet that it has going forward. And sure, Facebook's always going to be hit with these kind of like fines, and it's always going to be getting all these cases put towards it that it hasn't done this right. But when you're in this kind of sector, it always happens. We're always going to see this with Facebook. And to be fair play to them, this year they've put a lot of money into improving all the privacy measures that they have, all the security, and that'll pay off for them, and they'll kind of become a bit more of a brand that's kind of a bit more less hated by the media because of they're not having them things in place for privacy and all of them sort of things. So Facebook has done a really good job this year of putting money in, and that has hurt the EPS. Obviously that will bounce back going forward, but Facebook has the potential at some point, because it has that much money, to start paying dividends. It's only just started doing share buybacks, which is something that Mark Zuckerberg wasn't really that keen on, but now he's decided to do it. So you never know, dividends might be around the corner, because for sure they could easily afford to pay a dividend. It's a company that still likes buying out companies, which is a great thing. So Facebook for me, while it's still kind of off its 52-week highs, and like I say, for me, Facebook in 12 months time in my opinion, should be a stock that's worth $250 a share, which would be a nice little bit of upside from here right now. And then going forward towards the end of maybe 2021, I think Facebook could be, depending on what goes on in the economy, we could be talking about a $300 stock in my opinion. So yeah, some fantastic upside from Facebook at these prices in my opinion, and that's why I want to get in. Our third stock is FedEx, which is a stock that is, in one way to put it, has been hurt badly, and it's been hurt badly by multiple things. And we've seen the stock has actually nearly got to half its value now in nearly a year, which is kind of crazy to see that kind of decline in FedEx. I'm pretty sure no one could have really predicted how badly it has declined. And I made a video about FedEx when it was at $150, and I was like, you know, it's a stock that's been hurt, and it's a stock that is kind of now getting to a buying opportunity, but there could be potential for more downside. Obviously, we've seen it now go down to $150 to about $130 for FedEx, which I'm kind of like still a bit like, wow, I didn't think FedEx would be this, you know, cheap. But obviously, it's been hurt by so many things, and that's why the stock's down. And you know what, to be honest with you, with this China trade war going on, that's the big thing that's really hurting FedEx. I see this stock still with the potential to go down from here. But at the same time, FedEx is kind of getting to a buying opportunity because it's still going to be able to recover from this in, you know, a year's time. The EPS will start coming back, and it's still forecast for its revenue to increase going forward right now. It's done a lot of good investments going forward, and hopefully they will pay off for FedEx going forward. But like I say, at some point for me, now FedEx is down at $130. It comes kind of one of those risks to reward, and FedEx, in my opinion, should definitely be getting towards or you know, in a 2 years time, because we talk about long-term investments, FedEx could be $180 stock in 2 years time for sure, easy, and it does pay a nice little dividend as well. And all these problems FedEx does have, I do see them recovering from them at some point. And yeah, it's a great company, it's a great brand. You know, FedEx, you get TNT as well for FedEx, which is a massive delivery company in Europe as well. So I'll be honest, it's probably not a stock that I'm currently looking at buying. It's a stock that I'm just tracking very heavily because it's one that I'm kind of watching and thinking, if there was a nice little pull off these lows, then I might be going, maybe this is the bottom right here. But at the same time, there's other good companies out there, and you know, it's a difficult one, FedEx, because I do like it at these prices, and at some point I might start averaging into this company. I don't know, but it is starting to get really tempting at FedEx at these prices, because like I said, I didn't think I'd see it down here. But like I said, on this list, it's probably the least of these three that I'm looking at buying right now, but it is a stock that I'm just tracking heavily because of this downtrend that it is on right now. So guys, those are three stocks I'm looking at buying at the moment. Like I say, these two are probably the bigger ones, and FedEx is one that I'm kind of watching. Like I say, Carnival, Arista Networks, Altria are another three stocks that I am tracking. Don't know if I will buy them three, but like I said, those are other three that are on my list. So I probably, like I say, I'm probably going to leave it for probably another couple of days yet. And then probably when I get towards the three stocks I'm buying November edition, I'll probably have a good idea which three I'm going to buy from there. But we'll see what happens, guys. But those, like I say, I know people like tracking my portfolio and what stocks I'm looking at, what stocks I'm buying. So I thought I'd share that with you guys, and hopefully it helps a few of you out that are kind of interested in all that. So guys, give the video a like if you could. Subscribe if you it's the first time watching my videos. That'd be amazing. And I'll see you in the next video.